Welcome to the quarantine sessions. We have some of the members of Startups Without Borders who are still sharing the link so that more people can join. I am here with a super special, a stellar guest today. We're very glad because for the Ramadan edition of the quarantine session, we've partnered with Cairo Angels, and today we're speaking to the General Manager, Zeina Mandour. Zeina, thank you so much for joining us today.
Thank you for taking the time for this, and it's our pleasure. And we're happy that to be actually the first to have partnership in webinars. We're happy we're doing it with you guys because we feel there's a lot of synergies towards working together, and we're part of our mission that we want to work closely with the startup and support them, because at the end of the day, not all of startups, they might not be ready to pitch to Cairo Angels, or maybe post-ready, they are already managed to achieve, but there's a lot of startups need support and need to understand more, and we are here not only through the webinars, but this is one step closer to startups. But I think we're going to work on a lot of things together to be able to support them and to work. So I'm happy to see the first step in this partnership. Thank you.
Definitely. Thank you so much. We're here to talk about raising investments today, a topic that is, a key concern for most entrepreneurs who are building a startup. And I'd like to start by introducing some of the key concepts, some of the key clarifications, right, when it comes to sources of investments for entrepreneurs. Can you break down a little bit, how can an entrepreneur get funding?
Okay. So the first question as an entrepreneur I should ask is, which stage I am now, where I am currently, and what I want. Because this is very important thing. Yes, I know you want money, which is definitely essentially that's why you go to investment, but you need to ask more what you need more than money, because on each stage your needs are different and the requirement of money are different. So automatically you will be able to figure out what type of investor that you look at. So if you look, there is an early stage, which is the early stage, it's mainly related to, it might be started from the ideation into the prototyping phase. This is where you can find family and friends, and people can believe in you. And then once you, at the same stage, you can find another level of incubators where they can take this two types of incubators, people that only, they can invest in idea as well. So they can go along with the family and friends, where they help you. You only have an idea in your mind or maybe on paper, and they help you to actualize this idea. So this sort of funding where they give you money, but they work like more hands-on with you. They are your partner in this. They work on how this business plan, trying to get you mentors, they work. So it's not only money. That's why the question is that what I need more than money. So this is one sort of incubated. Another layer is acceleration or accelerators, where you already have a product and you started to launch in the market, but you want to accelerate growth to prove this product has been needed in the market. So this sort of incubator, also the accelerators, they boost your sales. They take you when you're doing 1x, and they then cycle to make you 200x or whatever the number is, because they accelerating your growth and make it aggressive. And that's what differentiates actually startup from any other company, because you're growing really fast, rapidly. And then it can go hand in hand with the acceleration, or after the acceleration are the angel investors, where the angel investors, they are, what they call them angels at the beginning, they're helping you, they believe in you in a very early stage when you started to grow, and yes, you're accelerating your growth in a way or another, but you've been for a couple of months, you don't have even a legal entity or anything. You manage to get traction, but it doesn't mean this product is viable or it will be able to sustain in whatever things happening, like COVID-19, for instance. So he believes, and he put money, and not only money, he puts a network where he can support, network when he can give you a mentorship, but not excessive as the incubator and accelerator, but he's there on a strategic level. So he's on the board level. You see him on a quarterly basis, you ask for a specific help. While the incubator and the accelerator, they are hand in hand. They work for you on a crash course for a couple of months to achieve a specific targets. And then after the angel investors, which is the angel investment or the seeds, which is around, on average now, it used to be like 2 years ago, around 120K USD. Now it's an average 300 and can go up to 500. This is when it comes to the seed or early stage investment from angel investors. You can see now after that is sort of a bridge round, depending on the maturity of the startup. Some startup can go all the way to Series A, or people can go to a bridge round / pre-Series A, where they can go to their existing investors, and which is either incubators or angel investors. A lot of people do follow-up rounds because they believe in the startup and they want to help, and actually it shows more confidence. The second, or you can go to a new, there's a lot of funds now we can see emerging that focusing on the gap of the bridge round, where they put around 500, 600, not all the way to 1 million, which is almost Series A. They focus on this, where it's like a short run. You take a bridge round for a couple of months to make you sustainable, and you achieve a specific target. So you'll be able to talk to the venture capitals, where they give you more Series A and Series B and follow-up rounds, where people syndicate. Because if you go to Series B and Series C, it's a lot of money, and it's not only one VC they have the financial capability to do that, but they don't want to put all of their eggs in one basket. So this is where you can see a lot of syndication happens. A lot of VCs come in a specific stage. So this is mainly depending on the growth and your need. And definitely VCs, they help and they support and mentor, and you can see a lot of models been emerging, not only giving money and that's it and observing, they are supporting and helping. But again, on a strategic level, not as intensive as when you were like little on an ideation stage, where the accelerator and the incubator working very close on a crash course of 3 months or up to 6 months.
Right. What about family offices? Are they active in the Middle East? What is the way in which they invest?
Okay, what I have seen now, I can see them growing. Before that, it was, on my experience, I'm talking from my perspective, there was not a lot. You can see people individually, they manage somehow the family fund and they do that, but there's one person that he believes in investing in startups. But I can see in our network, we can see a lot of people that represent their family. They represent their family and they're trying to allocate because they want to diversify. I think it's becoming more mature. People can see there's a lot of potential. People become aware of such risk, but they understand the market is growing, and you can see we start to see a little bit of exits. So they start to actualize, because the family offices, they will want to actualize the money, but then they want to see they've been growing. The angel investor, you understand, they put their money and they lock it for a couple of years, and they are not sure what's going to happen. The family office, they are willing to take the risk, but they want to see, at least I can have a way out sooner or later in a way or another. So the more exits we see, the more family offices will they enter, from my perspective. The appetite is growing because they look at strategic alliances. I see some of the family offices, they say, I see this product, it could fit for me to be integrating in my supply chain, or maybe it is something that we could be partners, or could be my client later on. So some of the family offices look for a strategic alliances. So they put investment not for the sole of purpose of investment, but as well that I can see synergy between me and this startup. And actually, this is even better for the startup when you look, because when you consider this family office, you know, to either supply you with a raw material if it's manufacturing, or supply you with the business development and leads, or maybe potential acquirer later on. It's a different perspective. So I think adding the family offices layer and tapping into the market, it gives more confidence in the ecosystem.
Right. Now, you've showed us sort of a panorama, right, of all the different sources of investment. How can an entrepreneur identify the right investor?
Okay, so let's do a checklist. Simple as this.
Yeah.
First, it's which stage is my product. So it's my product. I started to develop a prototype and I want to test it. I developed the prototype and I test it, and but something is wrong, so I need to figure out what it is. So I'm talking now on a product development and a technical part. So this is something. The first question that I ask. The second thing is, I'm a pure technical person and I don't have any business acumen, so I need a business acumen. Related to how much money I need. This is a different thing. I'm looking for $1 million. I'm looking for 200. I'm looking for 300. It will give you the appetite. What type of a deal? Some startups, they only prefer equity or prefer convertible note, whatever. If they want people to work with them closely, or just want money and they know exactly what they want, and just implementation, maybe because they have a mentor already that's supporting them, or he will take equity later on, like a couple of shares or percentages, so they only need money. So this is a question that I ask: do I need help in the product itself? Do I need help in the business? Do I how much money do I need? And the last thing is, do I need someone to push me, or I already know where I'm going? These questions will automatically give the answer. So let's take different scenarios. If I decided that I'm a pure technical person, I know my product very well, but I'm not sure how to market it, how to build a business plan, how to do all of that. All of the incubator and accelerator, they can easily help you with this. Another question: do I want to grow locally, or I want to grow internationally? So I need to look at the incubator or the accelerator that has a reach where it is. So if I'm talking about Flat 6 Labs, I'm talking about 500 startups. They can help me grow bigger in specific markets. So if I want to go Bahrain, yes, Flat 6 Labs has presence in Bahrain. If I want to go to Saudi Arabia, who is now stronger in Saudi Arabia, is 500 startup with the MISC. So this is the question that I need to have a foresight. The way I look to my startup is the same way when I assess the investment. I want someone to mentor me and support me and give me financial, and as well to have expertise in a specific industry, because I have the technical know-how, but I'm not sure how to enter the real estate market, for instance. So I will go, or the facility management. So I'll go to Cairo Angels and pitch, because I know Hussein Alam, he's the one from the facility management. So if I convinced him and he's on my board, he will be able to help me to achieve my targets. So you take the money, it's for expenses, but this is not necessarily you'll be able to make you achieve the targets. You need tactics. So maybe getting someone on board on your chairman level, or not an executive level. I'm talking about either a board member or a chairman to help you achieve. This is another thing. So now I want a business development thing. So this is sort of questions will automatically, or maybe I want alliance. So it's the same thing the venture capital actually think. The VCs, when they decide to invest, not all of them, but some of them, they consider the opportunity, how it can complement their portfolio, how they can work together. So it's leverage more, and it's a key success factor for me as a VC when I look at company where I have company in the e-commerce and I invested in, and there is another company in logistics I invest. So now they can integrate. I don't want them to merge, but they integrate. So I'm sure that I can be on the top of the quality. I'm sure their alliances, it will make sense. So the chances of two companies can grow is higher. So the same thing for me as a startup, when I look at the investor, what sort of portfolio that he invested in. There's a potential for me to get a partner. So it's the easy decision-making process for him, and me is actually much easier, because definitely he wants me and I want him for his portfolio, not only for the money.
Right.
Yeah, so I'm not sure I answered the question, but this is
yeah, definitely. So it's what they call kind of smart investment, right? It's not, as you said, it's not just about the injection of cash that will cover costs and expenses, but also who are you bringing into your startup?
Yes, exactly.
Right? What is the talent? What is the portfolio? What is all that leverage that you can get? Now, let's say an entrepreneur is looking for, an angel investor to support him on the early stages. Where can they find an angel investor?
There's actually, let's call it 3 ways. First way, if you are part of if you already been enrolled in incubator or accelerator, they have access, and the part of their KPIs, they need to all the time showcasing your product to angel investors and different type, either by a family office or any type of angel investors. That's a part. The second part, if I'm not part of accelerator and I don't need it, you can actually encounter them in sort of networking events. Even you go on and pitch your ideas in different platforms like competitions or events like Startup Without Borders or Rise Up, whatever. This is actually the right atmosphere and the right environment where you can actually find them. And the more structured way is angel networks. Why people go to angel networks? Because it's reduce the hassle for you. You don't have to deal. There's not only, you will never find one investor can actually cover the whole ticket. You might, definitely, there are super angels and everything, but usually there are a couple of people to handle all the logistics with a couple of investors and negotiate and discuss and answer the questions might be hectic. So the easiest way for you to find a pool of investors that might cover 50% of your ticket, it could be a network, or maybe 100% even. So when you go, there's a lot of networks now we can see emerging here in Egypt. I'm happy and proud to say AUC Angels, Alex Angels, and now they launched a fund. Cairo Angels. We can see now in Upper Egypt there is a new one emerging called Nine Angels. There is an entity that's supporting and generally not putting money, Malaika. So this is sort of, and you can see in Saudi Arabia, Uqal, and you can see Bahrain, Tanmo. There's a lot in Dubai, angel investors. You can see, and again, when you decide which one you can go, is the checklist. Maybe I want to grow in Dubai.
Mm-hmm.
There's another thing. When you go directly to Dubai, the investors might ask you why you don't have a local investor.
Right.
Because they understand as well the market here in Egypt. So I want an anchor investor from your local country to give me support if the product is localized to Egyptian market somehow. So that's part. You can go there and they will have their team and they have structure. So it will lead you, especially if you are not sure where you are going or not sure which is the right structure, you're not sure this is the right valuation, they will guide you. They are not monsters. They're trying to help and they're trying to support, but as well, you need to think you want to win and they want to win as well. So it's a win-win situation. It should not, they are angels at the end of the day because they believe in you in early stage, but doesn't mean that you crush them and you put, especially they are in the very early stage of investment. It's the same, the incubator. So they get diluted in the future and you're still growing and you will need more rounds. And the more rounds mean the more success for you, but it means as well the more dilution for them as well. So that's how it goes.
Right. Let's take again a step back and think about approaching that angel investor. You mentioned, right, the networks, but you also mentioned networking events and social occasions where you can meet them informally. What are the do's and don'ts of approaching an angel investor?
First of all, don't say it's a unique product and you don't have a competition. There is always a competition. Okay, let's put, for me as an investor, what I look at is the market, entrepreneur, and the product. Definitely, no matter what the market, I cannot change. So I need to play with whatever is happening. So this is important for me. So you need to show him how the market is big. You are too small now, but you're promising the future. The more you promise the future, for me, the only way to validate that to be able to achieve this future, aside from your plans, is the market size. So when you talk about the proper market size, it makes sense. You should be passionate about you know what you need. You don't have to be a perfect. If you are perfect, why you need money? This is you need to say, I want money because I have problem X, Y, and Z, and that's why I need this money. This is normal. To acknowledge you have a problem and you identify them. This is actually the first step, and that's why I need this allocation of money to be able to solve it, to be able to penetrate X percentage of the market. So now I understand the last thing is the team. The team dynamics is very important when when you understand your investor, you'll be able to approach them very well. For instance, some investors, and you can simply ask, they don't like to invest in a solo founder. They believe they want to have a couple of people with founders. If you're okay with this idea, you can go pitch it to this guy and tell him, I want money and I'm looking for a CTO to be co-founder, because you acknowledge this fact, you know it. But if you don't want someone with you, don't ever go to investor is not into any solo founders, for instance. So you need to do your homework to understand what you should say and what you should not say. I think the passion is very important. This is something I have seen. A lot of investors, they consider and they discuss more when they see the passion and they see definitely logic behind it and the story can goes. If you failed before, it's not a bad thing. It actually shows that you're persistent and you learned. So I failed when I was doing company X and I'm approaching a new one, or I've been in the market for a couple of years and things didn't go well, but I decided to pivot and this is the right way. So I tried a couple of things and this is the right way. So if you pitch your product in the right way related to what is the market and where you want to take it and what's the problem you have and that's why you need the money, and to understand which angle you should go with the investor with. Doing your homework, simple as this, will make it very easy.
Right. So the two questions come up from what you said. One is, do your homework. So how do you actually find out, what the investor is usually investing on and where do you get that kind of information? And the other question would be, in terms of social etiquette, in terms of, startup etiquette, is it okay to ask for another meeting, to ask for coffee? Is it okay to ask for contact information? What is acceptable? What isn't acceptable?
I think, you always can ask for contact information. It's a simple question. It's like, hi, I'm Zeina. I have a company. I just want to ask, do you have a couple of minutes to talk or you would prefer to talk later? and I'm happy to send you my presentation for you beforehand. Some people, you put all of the options, and the reply will give you essence. So it's simple as the question is, do you have time now or not? Simple as this. Or are you staying here for the whole night? We can allocate hours. And we need to put in mind the investor, especially when they come to social events, they're coming for this. They know that some of the events actually allocate hours, and you as an investor allocate this hour and try to match make. So they have the capacity to meet startups. This is something that either the investor or the investment team of this network, for instance, because as Cairo Angels, we have the investors, they go and they scout and they tell us about opportunities, and the same we go and scout as well. So when we come to such event, we already have the capacity and we're willing to have. Maybe we don't have a lot of time to meet everyone. That's where people say, yes, let's exchange contact. You can give him your contact and ask him for his. If his answer is no, it's fine. You don't have to nag. This is okay. He will not say no. He say, I ran out of cards. I will send you an email. But the first thing I'm sure of, you need to send something in the email. Like after you meet him and you take your content, thank you a lot for having time for me for a couple of minutes. This is my pitch deck. It doesn't have to have everything, but at least initially, if you don't have. And I want, you can start, and even when we coach our investors, tell them the best way to start a relationship with investment is mentorship. So you can ask him for what he thinks. So first of all, he will be critical in a good way, because he'd see that you just want his opinion. So you're not expecting him to invest, and at the same time, he's not thinking now in the mentality, I might invest, but he doesn't have the expectation that I need to put money so I have a freedom. And automatically the relationship will build on. This is normal. So when you send him something and tell him thanks a lot for taking the time, I appreciate. It would be good to have a call or a meeting. Tell me what is your approach. And actually, when it comes to mentorship, the question that we ask, what is the right method you want me to communicate with you later on? Some people prefer WhatsApp. Some people hate WhatsApp. They go through email. Some people like Facebook. You will never be able to get such a thing. You just ask, and for the content, when they give you, he tells you WhatsApp me better. Cool. Right. There's no problem in that. So, but once you send them something, they will have something to look at and decide what should be the next step from them.
Right. So we have a question from one of our viewers, clickmayor.com. I don't see your name, I see your startup. What is the difference between convertible notes, preferred shares, and common shares? We're getting really deep now into the investment aspect.
Yeah, okay. So, so when it comes to convertible notes, preferred shares, and common shares, I will actually rephrase the question. When it comes to either equity or convertible note, this is a Asperdo agreement. We agree on when my shares as an investor is going to be preferred or common. So preferred, as a normal word, is preferred. So it means they have a different privilege, which is simple as prioritization in liquidation. Somehow, God forbid, your company got bankrupt, and you need, the first thing as per the law, all the money you need to go to, if you have loans outside of your that you own it to other external people, if you have taxes and anything, it's not on top of my mind, the liquidation process. But when it comes to who takes the money first, when it comes to shareholders, is people preferred. So they have different privilege, but this is pretty much is normal. So I see it in all of the shareholder agreements. It's something that you really don't have to worry about, because if you are in this stage, both of you are losing. Actually, you already lost your company, you lost your passion and everything. So they might have some sort of privilege when it comes to voting and everything, but when it comes to startups, it's simple as the voting goes only to on the board level, and depending on the structure of the company, it's either LLC or it's whatever the legal entity. So if it's an LLC in Egypt, you don't really have a sort of a board. It's something like an advisory board, but you allocate the voting system. So it's not something that you really need to, and it's my advice, not something critical on when it comes to startup phases. Just simple as another layer for an investor to protect themselves against other people who is in the company, because they're taking a different risk than you.
And what about the convertible notes?
Okay, what's the difference between them and the equity? Or okay. So there is no wrong or right way why people go to convertible note or why go to private to equity. It's preference. For me, the reason people go to convertible note to delay the discussion on valuation. In other words, when I decided to go on a investment and I say it's equity, it means that we need to agree on the valuation that I'm getting in. And sometimes it's very hard for the early stage startup to do the valuation because you don't have enough traction, you don't have something to evaluate on. So the startup they have their dreams and they say whatever the number is high, and investors become more realistic and he wants to put it down to make sure that he doesn't lose a lot of money. So they go to convertible note to delay the discussion of the valuation, because not all, depending on the type of the note, because there is a lot of notes like the KISS and the SAFE and not and you can in Cairo ranges we have our own version of the convertible note, but this is in ours we put valuation. Actually, we agree on this. Even if you want a convertible note, but let's put things clear right now. So yeah, we like it this way. So people go for the convertible note, simple as this, and it gives more flexibility for the startup. Sometimes the round are much bigger, so they're raising 1 million, and it's not going to be the same entity, so it's much easier to do a couple of notes. I don't have to wait and to put all the legal registration and all of the work, so it's hassle free. But
yeah, I just want to take one step back 1 minute. How do you define a convertible note? Can you describe it a little bit for those who may not understand?
So it's a loan. So it's a debt instrument. So you own an investor money. So when you have like a legal registration form, there's nothing under my name. If I invested as Zeina in a convertible note, so it's the two founders, and that's it. My name is not there. My name is more of on the balance sheet that you owe Zeina X amount of money. Right. Like taking a loan from a bank, but you're not eligible for a bank, so you take it from me as a person or an entity. But this loan has a privilege on a specific terms, either it's a time frame or whatever X evaluation or something that could be converted to a shares. Simple. Right. So you don't have to pay it back. It's simple as I say that this is note and it's going to mature after 2 years or a year and a half. 2 shares, simply preferred shares or common shares, whatever the question is. So that's
perfect. Yeah. Perfect. That was very clear. Thank you. If you guys have more questions, please type them here in the comments and the messages. We're going to be asking Zeina. I have another one. What are the factors that entrepreneurs should be ready for when raising investments?
Well, what do you mean by factors?
So I know that, for example, you need to do due diligence, right, before raising investments. So what are the kind of things that you need to be prepared for? What kind of things you need to be aware about? Because they are going to check your numbers, your accounts, right? So what are the things that you need to be ready for?
Okay, as a startup, when simple as I've been into the market for like 2 months. I need to understand what is my customer acquisition cost, even if it's high, there's no problem. Understand the retention rate, because I need to understand how we calculate it. This is very, very important. Define what I mean by active user. Number of downloads is cool, it's nice, but it doesn't mean anything for me, sorry. Because they downloaded the app and they deleted it. It doesn't mean they are active. Let's define active user. Active user is the one who stays on my app for 2 hours. So this is for you as an active user. Right. There's not the right formula, but you need to do a definition. So for me to understand, this is as per your industry, what is the active user means? Related to when your monetization, because there's other startups, they don't have revenues yet. Mm-hmm. They have a lot of database, they are growing and everything. That's cool. I like it, but not every startup is a Facebook. Mm-hmm. So I want to see what is your clear plan of monetization of this. So if you are in the stage of you don't have revenues, but you have database, I want to see the monetization plan. I want to see what is your customer acquisition. I want to see retention, how you're making your customer is getting attached to your product. So it's not a one-off thing or outlier when you made a good marketing campaign and that's it. Because this is proof the concept that I'm not growing that fast, but at least I can keep my current customer, which is more than enough. Another thing related to my financials. People put, you are a founder, and this is what we relate to one of the questions a lot of people asking. Someone is asking about what should be my range salary, the salary for the founder. I need to understand my expenses. Yes, you want to hire the best caliber, but there's no reason to hire an expensive caliber. You want someone who believes in you, who believes in your company, is growing. Because if you hire a caliber that you're only giving them money, especially on the early stage, they will leave you for a better offer. But if you hire someone who believes in you, and you can attract them, and you have a good strategy for ESOPs or whatever, or even to be co-founders, that's better than actually, which is will reduce your amount of money that you're asking, and you even give you more a longer runway. That's something that you need to be acquainted with and understand what sort of people, who the people that you need to pay them a lot of money, and who people that they should look for more than money. This is something important. Related to, you need to be aware with your competition and aware of how you will evolve your product, because even if you don't, per se, if you don't have a competition, assuming that there's people will enter. So how you will sustain yourself, how you always be innovative, what is your next move? This is the question. What's my next move? What things that you are monitoring to help you decide what's your next move? Like, what is the right metric for you as growing? Is number of minutes, is number of referrals, is number of repeated orders. This is something that's important, that's showing growing. Or what type of customers you have, your type of industry that you need to acquire each time new customer. So how you will be make this sustainable? What is your channels? This is sort of things for me to ask. I'm not expecting the entrepreneur to be a perfect pitcher. He doesn't have to have the presentation skills. I don't care, as long as it's not a presentation skills company. I'm not expecting him to have a proper financial model. He's not a CFO. I'm expecting that he's acquainted with the product and he understands his customer very well. So automatically you'll be able to develop a plan.
Right. What about the investment terms? I mean, you mentioned several things. I was just wondering, what is considered, for example, an average equity for an angel investment, right? How much in terms of shares are you supposed to give away?
Yeah. Okay, there is, I know, yeah, depending, but if we talked like an average statistically wise, per round, people take from, on each round for you as an entrepreneur, you dilute from yourself or from the whole equity round, I think from 10 to 15%, this is the average. As Cairo Angels, we usually take from around 15 to 25%, but sometimes it's lower if it's bigger, the ticket is much bigger and the startup more mature. But I think the average, let's say from 10, maximum is 20% in each round. And then definitely the range changes from each stage to another. But if we looked at the incubator, I think they take on average 8% to 10% somehow. Right. And if you looked at the angel investor, you can see they can dilute another 10 to 15. But then you need to look at yourself, because there is no investor want to invest in a company that the founders are really diluted, like they have a minority stake. It means that they don't have enough motive to stay in the company somehow. The investor is the one who's leading this.
Yeah, it's keeping the balance, right? So there's another question from clickmayor.com. Which is the most important kind of traction, revenue or number of users?
It's dependent on the industry. Definitely revenues is very important, but sometimes if you work, for instance, let's take Maxab, for instance. Maxab is the company that they're working a lot with the FMCGs, and they do delivery and a lot of things. And they tapping into a new layer of a specific related to the wholesaler and the retailers. They might not have revenues yet, but they have a lot of number of transactions. And the reason I'm not saying they are this case, but the reason that such a company might not have revenue yet, because they are commission based. And the only way to take commission, they need to drive a lot of transaction to their wholesaler. So they don't have that enough rapport to be able to hit. But at least they know, for instance, once I hit X amount of transaction per day that's coming from Maxab, then I will take from your percentage. This makes sense, because for me, you have zero revenue now, but you have flow of people coming in and out, and once you hit the threshold, this is when you'll be able to take percentage from them. It's much more. But if you are a SaaS product and you've been in for a while, and you suppose you are freemium, and you launch your free app, and then you start to launch the subscription, and no one is actually converting, this is an issue now. Right. This is I'm not talking about profitability, but I'm talking either you're giving a lot in your free model, so people are not really willing to go to the paid one, or your product is not worth them to pay. So this is something. So I think it's a company specific question, and it's a market and industry specific thing that it doesn't have a specific rule at all.
Right. How do you form?
Can I say, I'll add another example, harmonica,
Yeah.
it actually got acquired before they have a proper revenue stream at all, because
Right.
of users, because this is the industry, social, it's a social network. So
Right.
because this industry doesn't require money at all.
Right.
Yeah.
Ahmed Haweli is asking, I'm currently working on my pitch of a recruitment platform, which is more important. Which is more important, the number of CVs that I have or the number of companies that I can reach as customers?
It's both actually. So you have two dimensions. Without CVs, no one will come to your platform. Without companies, no one will post their CVs. So it's both of them. And the question is the ratio. You need to understand the ratio. What I mean by that, that you observe when is the customer or the company, because then I think so who's your client is actually the company, the one who's paying to see the CVs. This is an assumption. So simple as the ratio for the company, they post, for instance, 2 vacancies per month, and they need to see at least 100 applicants. So it means that I have to have ratio for each opportunity, 100 applicants. So to have the momentum is, I'm saying that I have this number of customers and I have this clients and I have this number of CVs, which means that I'm on the right ratio, which is 100 to 1, for instance. This is something that you need to look at, not only two numbers separately, is the ratio and what is the right fit for the ratio.
Right, right. Clickmayer is asking, how long does the round usually take?
It should be, it's my preference. I don't think it should be less than, I'm sorry, I think I understand the question wrong. Then he means by the round is the runway, or the round, like how much time it takes to collect the money from the investors. If it's, I'll answer each one and see. The round, it should, I think it's average, depending on if it's, for instance, the incubation and the accelerator is one of the fastest one, because they have set terms and take it or leave it sort of thing, and it's a very straightforward thing. So I think it's a couple of weeks, maximum month, from what I know. The follow-up rounds might take longer. Angel investment, it takes from average month and a half up to 3 months, depending on the companies and the readiness of the data. I think VCs, it take on average month and a half. They are faster because the decision-making process are different than the angels. Angels are a group of people decide and there's back and forth. The VCs is only, they have investment committee and its decision is clear, so it's a limited number of people. It's the same goes to the incubation part. So related to the runway, if I'm raising money, the question is how long should this money should sustain me? It happens through, I prefer it a year and a half, because think of it, it takes like the average number, it takes like best case scenario is 1 month to close the deal, and can go up to 6 months actually sometimes. So which means that if you only raise for 1 year, it means that you will detach from your operations for at least 2 months to prepare yourself and go and meet investors and discuss and everything. So it means that you're not focusing on the operations, so the company is not growing as much to raise round, and you are being squeezed because your money is not sustaining you for the rest of the year. But when it comes to a year and a half, you've been fully year dedicated to the company, and you can see the growth and you understand it very well. And in the last 6 months, you start to think about how you will raise, and you'll be more laid back. And at the same time, it gets you prepared to such a situation like COVID-19, for instance.
Right. We have one more question, and it's going to be the last one because we're running out of time. But Ahmed is asking again, for such a startup, he means the CV and employers platform, which is better, a VC or an angel investor?
Simple as, if you think you have enough traction, you can go to VC, but the VCs will tell you, VCs, they like mature companies in specific. They put a lot of money and they take a different type of risk. If you think you have enough traction to go to a VC, it's a different level. But if you are in a very early stage, the VCs will not consider you. They will consider, actually, angel investors, the only one will being angel enough to consider something was not proved in the market or been in the market for a long time.
Right. The angels who believe in you. Okay, Zeina, thank you so much for such an insightful session. We've extended way longer than expected. Hopefully, we're going to continue to run these sessions with Cairo Angels for the whole month of Ramadan. So stay tuned. We're doing a session every day from Monday to Friday. Tomorrow we have a very cool session about valuations. So thank you once again. As we always say, happy quarantine.
Thank you everyone. Thanks a lot everyone for the questions and listening. Thanks a lot Valentina for the support. And as Cairo Angels, we're happy to be part of this. And I hope it was useful to everyone. And definitely if anyone have questions later on, please write away to our Facebook channel and we're happy to answer.
Perfect. Thank you so much. Have a good day. Have a good day, everyone, and happy quarantine.
Bye.
Bye.